All right, keep my ear out for the doorbell and let people in as they come. But for now, I just wanted to welcome you all so much. We are just delighted that you're here. This is the beginning of a monthly process on our end. So we work with over 150 clients on a monthly basis for a variety of different things, including bookkeeping, controller, fractional CFO. And generally speaking, that's for businesses of 1 million and up on a project basis. It might be for businesses between 250 and a million, it varies. But one of our essential core values as a company is constant and never-ending improvement. And we have various free resources for our community, including a Facebook group with more than 4,300 business owners, all of whom dedicated to really managing cash and their finances in their business and wishing to implement the Profit First system, which I suspect you're going to hear about today. But we wanted to bring in this new, more interactive monthly workshop format for everyone in our community. We have many people that we touch and engage with on a daily basis in one way or another. So we're super glad you're here. Michelle mentioned, for those who are already on, that this is intended to be interactive. So Michelle has a lot to share, and you may get everything you need from just listening, but please interrupt, raise your hand. Generally speaking, I will say keep yourself on mute unless you want to ask a question. That just helps any background noise not interrupt us. But otherwise, you're welcome to drop a question in the chat if you don't want to come off mute, and I will raise my hand. Or otherwise, just feel free to engage so you really take away what you need from this presentation. I will note also, many of you shared what's important to you about being here today and what you're challenged with in your business at the moment. Some of those may become themes in today's presentation, but we have a whole slew of workshops coming, so some of them may be on future workshops as well. So hang tight, ask your question in the Q&A, but if it's not specifically addressed during today's presentation, we'll find another way to connect with you. Let me see if there's anything else I wanted to touch on while we're here. I don't think so. I think that's it. Michelle, I'm going to hand it over to you. I'm going to mute myself and bring people in as they arrive.
All right. I want to start off by saying that I truly believe in serving the communities that we engage with. And so there is no part of this that is a pitch. There is no pitch for some of our numbers. There's no pitch for Profit First or anything else. This truly is meant to serve you. And so please don't think that there's going to be something at the end of it to be like, okay, and if you want more. But really, our goal is to have on a monthly basis things that really pertain to entrepreneurs. And so this is one of the first ones because it really is where we got the most feedback of this. People want to know, you know, my profit and loss says I've got net income and I don't see the cash. So that's why we started with this one. But every month, just be on the lookout for, hey, what's the next webinar going to be on? And we're trying to meet what your needs are. So at the end of this, or even in the chat, you can say, hey, Owen, I'd really like Michelle to go into a more deep dive on this, or I'm really struggling with this, because we're getting that feedback from you to truly serve you. So our mission statement here is to drive entrepreneurs toward financial peace. That's why Sum of All Numbers exist. And peace comes in so many forms. And one of them is just knowing, hey, where is the cash? The number one reason why small businesses shut their doors is because of cash flow. And so it really is a pertinent thing for each of us. And I think it's what it keeps us up at night. Like, oh my goodness, I know there's money coming. People owe me money, but I don't have money to pay the bills that are due right now. That's the cash flow of it. So we're going to start off, I'm going to let you know a little bit about Sum of All Numbers. We're going to go through each of these areas as I go through this presentation today. And again, you please chime in at any point, especially if I say something that just doesn't make sense. Please do not feel like something that you might be the only one that has that question, because more than likely somebody else does as well. All right, I want to let you know a little bit about Sum of All Numbers. We started in the San Francisco Bay Area, and Holly Clausen is the founder of our company. So we've been around now for, almost 20 years. That's crazy. Like I was doing the mental math really fast. I'm like, oh, it cannot be true, but yes, it is. We're almost there. And we serve small business owners across the United States in all industries. And I've already mentioned what our mission statement is of driving entrepreneurs to financial peace. And every single week, I lead the team here to say, how have you done that? I want to hear how you've done that. So we take that very seriously. We are certified as Profit First Professionals, and that is a cash flow management system based upon a book written by Mike Michalowicz. And we got Firm of the Year, which was really exciting, meaning that we are truly helping with cash flow management by integrating or implementing that program with a lot of our businesses. And over 1,200 clients in the last 19 years. That's amazing. Kind of crazy to see that in numbers there. Okay. All right, so we are going to start with when you start your business and you begin, then all of a sudden you're paying for things, collecting money. First of all, most of the money goes out the door when you're starting. So depending upon where you are in the life cycle of your business, then you know that there has to be some organization of those finances. And in the beginning, a lot of the times it's like, well, what's in the bank? How much money is there? What do I have? And then mentally you're tracking, what do I think is going to be coming in and what do I think is going to be going out. So we start off with this bank balance decision making, and perhaps you might still be there. I think we've got all types of businesses here with us today. But then there becomes a place where it's like the IRS comes and gets involved and says, guess what? You have to file taxes, which then became the beginning of CPAs and bookkeepers and all of this, and then the financial statements that you are probably aware of, mainly the profit and loss. It's also known as the income statement, and then your balance sheet. And what I want to talk about today is that those two go hand in hand. And the whole purpose of having those is for banking institutions seeing the healthiness of your company, but really to report to the IRS how much money did you make and how much do you owe. That beautiful thing of owing the taxes at the end of the day. All right, so we're going to start in with your profit and loss. Now, the sections of this financial statement are very easy, starting off with the income or revenue, the money that comes into your business. The next is that some of you have actual materials that go into preparing what your offering is. So if you're in construction, then you're going to have to buy lumber and nails and such. You also might have subcontractors, things where you are providing a service, but you aren't the one that is actually, you have to subcontract with someone else to deliver that. Again, going back to a construction type business, it might be that you've got a plumber because all you do is the fine carpentry, but you need a plumber to come in. I noticed someone here did a fishing, doing fishing expeditions. So you might arrange everything, but you're not the actual one that owns the boat. And so your subcontractor would be the person who is driving the boat, because that's not something you do, versus saying, hey, maybe I want to buy my own boat and have my own employee. Then it might not necessarily be the cost of goods served there. We've got then this whole section here called our expenses, and you can see all the lists of areas that your expenses are. And this is just a generic chart of accounts. And one of the classes we're going to do is on how do you make the best chart of accounts for yourself. This is meant to be customized. It's meant to fit you so that you know everything. So when I'm working with a client, and if I were working with any of you, and I said, hey, what's in this repairs and maintenance, and you couldn't tell me, I don't know, is that auto? Is that my rent? Is that my vehicle? I don't know what it is. then I'd be like, let's change the name of that so that you know, so that you look at it, you're like, I know what that is. Otherwise, it's just data that means nothing and you can't make decisions based upon it. Once you have all the money that comes in, and guess what? This is only the plus one. Everything else is negative. Plus income, minus cost of goods, minus expenses, and then we end up right here with this bottom line saying net operating income. And most of us, our profit and losses, I don't know how we're doing. I need to see what's going on in my business. And we look at this and say, how much money did I make? And we see this bottom line here. And almost every single time, that's not what the bank says you have there. So it's like, where else did this money go? Where is it? So I'm going to share a new screen here, and we're going to actually look at a profit and loss statement. Everyone can see this, P&L, the profit and loss? Okay, very good. I pulled this up with real numbers in here. A profit and loss, first and foremost, is a range of time. So when you look at your profit and loss, if you pull something from January 2nd to January 30th, you've missed 2 days. You've missed the 1st of January and the 31st of January. And anything that happens on those days are gone. You will not see it. So please be aware that dates matter. Now, we function in QuickBooks Online almost primarily. That's just a choice for us as a business, but there are many, many different accounting software, management system. You can do it all by hand. It really doesn't matter. But this is, again, an organization here, and dates do play into it. So I wanted to bring up 3 years worth of data because for me, I'm always making decisions on a business, what needs to happen, where are we in relation to a prior period. And I'm going to dare say for you too, that having something to compare it to helps give some relevance to where your numbers are. So if you look at this company, you can see that 2022, they are doing great. And then look what happened in 2023. They just, brought in another 130,000. And then what happened in 2024 to where they felt it. It's like, they lost 110,000. So already we can see here that there are a lot of dynamics for their business. So sometimes when you're looking at this, and again, talking about the portions of the sections of the profit and loss, you might be like, where's my money? And immediately it can be like, oh my gosh, I'm feeling it because I just made $110,000 less than I did the year before. No wonder why I'm feeling this way in a comparison state. That's almost $10,000 a month. And I'm going to say that for most of us, if we dropped our revenue by $10,000 a month, we're going to be feeling it because most of the times we're not reducing our expenses by that same amount. In this case, this is a great example also of a company that said, I would like to dial down, and in 2022 and 2023 didn't track their revenue by basing it off of how many of my projects are recurring or non-recurring, that's just a project based, and how many are recurring. Great example of using your profit and loss to say, where is most of my money coming from so that you can make some decisions on bringing in more revenue. And then most of the time, I don't even look at the total. I'm looking at more of it as a comparison. In these 3 years, I'm going to say the fact that these were zeros is just that they weren't organizing their finances in a way to capture them here. And then they decided I need to dial down on this to see where are my cost of goods. So what I see here as well is I had to spend 149,000 in my subcontractors, development, and all of these for making 665. Then I made less, but look what happened to their cost of goods. It still went up. It went up. This is money going out. So the next piece of saying, where did my money go and what's going on here? For me, when I see this, I say, if these prices went up, and we saw this with inflation in America, or in the supply chain crises when all of a sudden you couldn't get it or you had to spend more to get the same thing, that a lot of people did not adjust what they priced out their services, yet they were paying more. So that's the second element. Again, looking at our sections of the P&L to say, where did my cash go and what's going on with what's happening? Where are the leaks, or where is my profitability going is really what it is. So right off the point here, I could look at this, know nothing about this business at all. I haven't told you what this business does, but I can tell you exactly right now. It's like, hey, you didn't adjust your prices, or you outsourced more than what you were doing and it hurts you. So this line right here, and I put it in a big block there. That is what you get to keep to operate your business now. That's what you keep to cover your overhead and your lifestyle and the growth of your company. Um, and so this number means a lot, and you can see that they went back to even below that first year where they were doing, even though they need $20,000 more, they kept less of it. Already decisions have to be made here. Going down here, there's not much for us that I want to dive into, but this is a matter of saying, where's all my money going? And what does it look like in comparison to prior years? This beautiful payment processing fees is something that every so often you're going to want to check on. We all like to offer the service of people being able to pay by credit card, and you just want to make sure you're staying as competitive as possible in getting the best rate that you're paying to your payment processing companies. So in this case, when I see that they made less, but they paid more, we got a problem here. Why did you? So either they took more in credit cards, which may or may not be the case, or it was a matter of they spent more and that went up. As we get down to the bottom, we get down to our net operating income. And like I said in the beginning slide, it has this number here of a net income of, there should be $18,756.38 left in the bank. And for most of us, that's where we stop and say, our profit and loss gives me this number. I don't see it. Or like the year before, 98,000. And that's where we have to say there is more to the picture here. But what I do want to note here is that as business owners, we constantly are looking at this bottom line and judging ourselves on, did we do a good job or not? And rarely do I look at this bottom line to see if we're doing a good job or not. The majority of time I'm saying, why did we make less and pay more? Why did we make less and pay more? And in this case, I can see they actually shaved down their expenses, but they didn't shave it enough to keep more. So I'm always looking at these numbers, not at the bottom line, but to say, what is this in relation to my income? What is this in relation to my cost of goods served? What is this relation to my gross profit? I had one company say to me, what do we want this bottom line to be? What do we want? What do we want our number to be here? And I said, I, I don't care what it is. She's like, how can you say that you don't care? I'm like, because you can say, I'm a $5 million company and this bottom line is 18,000. Or you could say, I'm a $200,000 company and this bottom line is 18,000. Well, I'm sorry, but if you're running a $2 million or a $5 million company, I know there's a lot of headaches running a $5 million company versus a $200,000 company. So I don't really care what this bottom line is. It's in relation to everything else. The other part is, remember how I said that this is about the IRS? So if you're talking about the IRS, what do you want this number to be? As low as possible. That's why we go into business for ourselves, so we can write things off. Now you need to get financing and you need to go to the bank. What do you want this to be? The highest number possible so that you get a loan from the bank. There are so many reasons, and it's not about doctoring numbers. They truly are numbers, but it's the way it's presented. And that's why there's a whole profession of CPAs out there. How do we get this so that you pay the least amount of taxes that you have to, or that you get the most that you need out of financing? So again, this focusing on this number isn't always the best thing. But this whole webinar today is, where's my 18,000 or where's my 98? We're going to focus on this 18,000 right now. Go back over here. And then we're going to say, now you've got a balance sheet. I'm going to say that 80% of the businesses that I work with are like, I don't care about the balance sheet. Let's just talk about the profit and loss. And it's because the balance sheet is not easy to understand like profit and loss is, where it's revenue coming in, telling you where the expenses are going. So the basic pieces of a balance sheet are that you've got your assets, then you've got your liabilities and your equity. And this isn't a webinar on accounting 101. This is more of like, what do I need to be looking at on my balance sheet so that I can understand the rest of my business and where my cash has gone? So we're going to go back over to the example of this same company and look just for the year of 2024. Remember this number of 18,000 there? All right, now we're going to come over to our balance sheet. Unlike a profit and loss that is a range, it is a range of dates of, let me look at first quarter, let me look at a month, let me look at a year. A balance sheet is exactly what is the value in this on this date. I want you to think of it as your bank. You have $200 in your bank. You go to the grocery store, you spend $50. Now the balance tomorrow is $50 when that goes through. It changes on a specific date. So once again, this is not the whole year of 2024. It is on December 31st, 2024. This was the ending balance. You could have a stack of checks sitting on your desk that's going to go to the bank. If it doesn't get deposited until tomorrow, it doesn't show up here. Or the balance of what it was the day before may be different. So in this case, I pulled in and said, well, what was the balance on the last day of last year? To say, well, what's going on here? What story does this tell me? That there's more in the operating account for this client than there was the year before. It doesn't tell me if they have bills they haven't paid. It doesn't tell me if there are things, checks that haven't cleared the bank. It really doesn't tell me much except how much cash was there. So you have to have a greater, like for you, I'd have to talk to you more. Is this normal? Is this not? What usually happens, and for most of us, is when it's huge, when it changes from 4 digits to 5 digits or whatever else it is, and then you really feel it. This one is, how much money do I have in here for my taxes, just in a bank account set aside? And this is a profit first setup where it's like of having different bank accounts for different purposes to say, what is my healthiness here? On this one, we can see, hey, last year we had a rainy day fund of 17,000 and it's really been depleted. And then that tells a story there, as well as the profit and loss of them making 98,000 the year before in net income, all the way down to 88,000 or 18,000. In our section of fixed assets, again, for IRS purposes, we have the ability to depreciate and spread out expenses. This is a tax strategy. And so if you purchase something, and in this case, this company purchased a computer and they spent $1,885 on it. We put it on the balance sheet because it's a piece of equipment and they're going to depreciate it for tax strategy. But what I want to point out here is this was cash that left the business and it's not on the P&L. So already there was $1,800 that does not reflect in that net income amount. As we come down here, this is our asset section. So looking at the difference from what happened from one year to the next, lets me find $1,800 that I know left the business that is not on the profit and loss. Mentally for that owner, like yourself, to say, where's my cash? Well, some of it is sitting right there. This section right here is our credit cards. And I put, this is not in the chart of accounts, this is me putting our in red. When you're using credit cards, all of the expenses, so if you go and you purchase something at Amazon and then you purchase something at Home Depot and you purchase something at the office supply store or whatever else it is, those charges are being put onto your profit and loss as individual places, like a bank charge or office supply or utilities or whatever else you use your credit card for. Then when you pay off your credit card, then it reduces this amount here. So in this case, we can see and make an assumption that this is just the normal use. By this time of the month, it's up at this amount. But do you see right here on Citibank, where a year ago, they didn't have anything on this, and now we have 26,000. What's going on? $26,000 of expenses that ran through the profit and loss, and now you have a balance here that you haven't paid off completely. This one, they started the year off or ended 2023 with a $30,000 balance, and they haven't been using it at all. They've just been paying it off. So there were $3,000 worth of payments made on this that didn't go to anything on the profit and loss. So this portion, I found another, besides the $1,800, I found another $3,000 that left the company in cash that is not part of that profit and loss net income number. I'm going to stop here and ask if there's any questions. I'm getting a little technical and I want to make sure I haven't, that there aren't any questions regarding these pieces.
So to clarify what you just said, are you saying then because that $3,000 did not go, well, it went to that payment, but yeah, actually, can you just
I will.
please?
This is the balance on the credit card. You owe $30,174.66 on this credit card. Perhaps you bought things at Amazon, and these are the notorious ones where it's like I bought office supplies, I bought equipment, or equipment's a bad example. We purchased meals, we had travel. Everything that accumulated to 30,000 happened in the year 2023. And all of those individual expenses are on a profit and loss for the year 2023. The airline tickets, the travel tickets, the Amazon purchases, the office and such, that those are already captured as expenses in 2023 that you made, but you never paid them off. You had the expenses that took place in that year, but you accumulated debt. And at this point, when you enter 2024, you are not making new purchases. You are just paying off all of that debt. So the $3,000 is there was no additional purchases of travel or anything else. It was just payments towards the debt.
Okay, so you're saying when it's that much money leaving the business, it's because it's not attached to any purchase, so it's not a value add per se, or I mean it's just yeah, okay.
It no longer is showing here. The only thing that is showing is the interest. Do you see how this went to 16,000? Because no longer are you just using a credit card and paying it off every month.
Mm-hmm.
What we want of saying, I paid for my membership of 1312, put it on my American Express, and I paid it off. I didn't pay anything extra. But when you go beyond a certain year, because we went from 23 to 24, all of those expenses that made up this 30,000 are hiding somewhere in the 2023 numbers. I paid for office expenses, I paid for utilities, I paid for training, whatever else there was that went put on that credit card. Now we're paying interest on the credit card, but in addition to, they were talking cash now, I paid $3,000 out of my bank account that is not reflected in this number. So when we say, where's my cash? Well, guess what? 3,000 of it went out just for credit card debt payments. Is that helping?
Yes.
Okay.
Michelle,
Yes.
we have another question in the chat. Is it useful to view the balance sheet with more than just the last 2 years?
No, it really isn't. It really is more of a matter of, I pulled this up so I could see what my cash changes were. And most of the time when I'm pulling up a balance sheet, then because I am helping most people with their cash flow, I'm looking at this change. And so sometimes I look at it and just say, I just need to see what the balance was on November 30th of 2024 and December 31st, 2024, 1 month, because I'm going to then capture where else did the cash leave the company that's not reflected on the profit and loss. So that's usually what I look at it for, and what you can look at it for as well. You will see your payroll liabilities. Again, this is another function of bookkeeping. When you see numbers in here, it is just a matter of payroll liabilities, as long as everyone's paying their payroll on time and you're not leaving it there and not paying it, which I'm hoping nobody's doing that. That gets a really lots of other consequences there. You can disregard this. In this case, it all zeroes out. But there are things where there's some more timing that takes place, so it sits on the balance sheet until that specific timing goes there. So again, look at the story behind each of these numbers. This one doesn't tell me that $26,000 came into the business. The story here is you started putting things on this and you didn't have it the year before, which we can see why, because there's not enough money to cover everything, and credit card is the easiest debt to get ourselves into. The next section is our other liabilities that are here. So a lot of people in the last few years, or if you're a small business, you have a small business association loan, and then a lot of our clients, because of COVID, are still paying off on EIDL loans. So you can see the story behind these two things are the SBA loan had a balance, the principal balance of $125,000. When you make payments every single month on any loan, a portion goes towards the principal and a portion goes towards the interest. The portion that goes to the principal is found on the balance sheet. The portion that goes towards the interest is found on the P&L. You have to take those two things together. So most business owners know exactly what their payment is. What they don't realize is that some of it is shown here and the other portion is shown on the P&L. If you have a lot of debt and you want to track that, we have clients for our bookkeeping side of the business that they split out the interest on their profit and loss by credit card interest and loan interest, so they can see it, because then you say, oh, I'm working hard on getting rid of that the credit card interest because interest rates are so high. Most of the time there's just one light item. But for you, if that's an issue that you're dealing with, then I would suggest you break it out say, I want to know how much interest is on my credit card because that can go away fast. And then I know that I'm only dealing with my steady payments for my loan. This is another $2,184 cash that left the business, and why our bank balance doesn't say $18,000. The story behind this, you can surmise, is, hey, we had the EIDL loan at the end of 2023 and we paid it all off in one big lump sum. It's gone. It's no longer here. And that too, the interest portion is on the P&L, and then the rest of it is right here, the principal portion. So another $14,000. Now, the last thing you want to look at as a business owner is this. And for each of you that are entrepreneurs, you can, and you're the owner, you can take draws out of the business in addition to your salary. And depending upon the type of entity you are, the way you take money out of your business to support you and your life is either through a draw or salary. And so when you look at what was the balance on my equity or my owner's distribution at the end of 2023, what was it at the end of 2024, I can see that this client took out $21,000 for their own, for what they needed, or personal expenses that don't have anything to do with the business, and the IRS doesn't want to have you write it off. The rest of these things, don't worry about at all. Just leave those completely alone. Like, it doesn't factor in. And we could probably have a whole class just on understanding those two numbers, but it really isn't pertinent for most of your decision making. So this is where we get to, where is my money? I thought I should have had 18,756, but I bought that new computer. So I need to take that out because we're talking about where's my cash. And then I made that extra principal payments to Chase in the amount of 3,000. And then I made the principal payment. This is the principal portion of the SBA payments for this amount. And that whole payoff to, the EIDL for 14,000. And then I took out 21,000. So the cash I have, my business lost $24,000 in cash, not lost. My cash is different than the healthiness of my business, but you can see here, this is not sustainable, which is why that new credit card showed, because there wasn't enough cash to cover everything. So we go back to the question of, hey, I'm a $5 million company. Can you see that a $5 million company with lots of debt might be really struggling? And a $200,000 company with no debt would be great, because all this section right here is the debt. Or if you need to take more money out of your business to live, then you might be taking too much out of your business to sustain the business. All of these fit into, where is my money? Why doesn't it show that I have 18,000? I'm going to stop here and ask if there's any clarifying questions on this. Many people will say, I need a statement of cash flows. I'm going to say, you do not. You don't even want to see that document. As someone who works in financial statements day in and day out and serves as a fractional CFO for companies, I'm like, I don't want to even touch that with this. I don't want to touch it at all. It's too complex. It's meant for corporate America. For you, this is what you want to see. I want to see what my net income is and see where everything lays in those sections so that I know where my problems are. And then I want to see what else did I have to pay out so that I can say, this is where I am, something has to change. Now you can say, now what do I do about it? What do I do about solving this problem? We've already talked about the fact that revenue went down and cost of goods went up. Problem area. That's the next thing something you can do. Hey, we had no business buying a new piece of equipment. If you had to, what else needs to happen? Perhaps we're paying too much in whatever else. And then the debt is a problem, and getting out of that debt as fast as possible is another thing that has to happen for the short term. So I'm going to talk a little bit about profit first and I can't see everyone's hands, so I'm not going to have you raise your hands. But this is a system of all your money comes in to your company, and then you siphon it off into different bank accounts. So when I shared the balance sheet, and we'll go back over to it, and you saw that they had these different bank accounts. When the income came in, then they put money in different bank accounts. And this is all behavior based, because each one of us know that if you don't see it, or you're like, I'm not meant to touch it, that sometimes we don't touch it. Then there's some of us that we don't care, we'll touch it anyway. But so you have to look at what your behavior is. Well, and in this case, what you want to do is say, hey, $100 came in, I want to put $10 in my profit account for that, or my rainy day fund. I want to pay myself for what I'm doing. I need to set some money aside for the IRS and the state. And this all is to cover you and your lifestyle. And the rest of it, I want to work and do off of my operating expenses. And what we saw is that your operating expenses have to include your debt payments. And when you don't have enough money here, then you go into debt, or you end up closing your doors. So it gets to where we have to make tough decisions. And if any of you as business owners haven't had to make tough decisions, then I would love you to stay on and tell me your secrets. Because I think we all have tough decisions to make, and a lot of it stems around money. But this is the simplicity of profit first, and then you pay everything out of this operating expense. So if we go back to the client that we were before, he would notice very quickly there's not enough in my operating expenses. And sometimes we just kind of put a little Band-Aid on and said, it'll get better next month. But when it doesn't get better next month, then that's when you say, no more. We are eternal optimists as entrepreneurs. It's going to get better. It's going to get better. But if you give yourself a deadline to say, if it doesn't get better by that, I've got to make some big decisions and make some changes so that you don't end the year in more debt than what you started the year off, especially when it's interest, when the interest rates are so high. So we go back here. Great. What do I do? Start with your income and look and say, what else can I do to increase my income? Perhaps raise your rates, look at who your top clients are. There's a whole thing, you can do a whole webinar and just things of how do I do better with bringing that income. Paul, I think you're the one that said you just had a marketing coordinator that you signed on. That's awesome. And a good marketing coordinator is like worth quite a bit. But guess what? Marketing is down here. It's an expense. So if you are spending money on a marketing coordinator, you're going to want to make sure that that income goes up. And if it doesn't go up in a certain amount of time, whether it's 3, 6, 9, 12 months, whatever it is, you decide, then it's like, I've got to cut that expense because I expect this to correlate with my income. Otherwise, it's just a drain on the business. And marketing can be like gambling, where it's like, let's just see what happens if I do this. Let's just see what happens if I do this. So the goal is for you to spend as little amount as possible and test. Do ads work for me? Do in-person engagements work for me? Does having a booth at a conference work for me? Does having a podcast work for me? Whatever it is, test a whole bunch of things and then say, oh my goodness, look at the return there, and then put more money on that. Kind of like a slot machine or the lucky table. Hey, I'm getting a better return. I'm going to put more of my expense there because I can see that the return is there. But marketing is something definitely to keep your eye on as you have that expense. Next thing, like we spoke about before, your cost of goods should always follow what your revenue is. And if it doesn't, then you've got to say, is my pricing off? Can the market sustain if I raise my prices? Are there things that I can get for less? And it's focusing on this gross product number and what is the ratio between those. So when we're working with clients, we're constantly watching this gross product. What percentage is our cost of goods sold versus our income? And I go down to 0.00 on a percentage basis. It was 64.2%. Now it's 64.7%. What happened? Do we need to make a change? That granular. What happened? Because usually this changes faster than this changes. And if you're not monitoring it, you're going to end up keeping less of your money to do the same amount of work for the same service or product. The next thing is to truly look at expenses. And in a profit first world, actually, let's look at this from a American base. In America, if you are over $1 million in revenue, let me think. Yes, it's $1 million. Then you want your expenses here to be 65% or less of your gross profit. That is what Wall Street and what corporate America and America in general looks at as a healthy company, to have your expenses be 65%. If you're less than $1 million, then those numbers are different. But also included in this expenses is what you pay yourself, and that piece is what is not included in an expense. Let me say this again. When you're an entrepreneur and you're doing everything yourself, you have this business to support your life. So most of the money that comes in needs to go into your pocket because you have to live. And then your company grows and you can have an employee. So you can still take this, but the percentage of all the other expenses can go up because at some point you can't answer the phone and do sales and give the product and do the marketing and pay the bills and do the finances and everything else. We all know that. But in the beginning, we do everything and then we grow. And so more in the beginning, more goes into your pocket and less goes into the expenses because you're doing more. And then you can still take what you need, but the expenses for the company can go up to 65% with a healthy company. And then the last thing is when you look at that net income, look at it in comparison to other years so that you can see where am I off. But by the time you go through each of these, you rarely care what that number says because all of your data is up here in this area.
Michelle, we have a question in the chat. Rachel asked, if you're doing 3 million, is 65% expenses still change?
So, and this is, again, these are based upon Mike Michalowicz's book. And once you hit 1 million, I'm going to just get my cheat sheet out because now that you called me out on this, I'm like, am I saying the right thing?
I just pulled it up, Michelle. It is 65%,
Yeah, that's what I thought.
1 to 5 million. Yep.
Anything over $1 million is 65%. When you are an entrepreneur, and that's what the 65% here, I'm going to go back to this. When you are an entrepreneur, what are you going to do when you're 90 years old? I really hope you're not running your business. I really hope that you are giving it to somebody else. And so what you want as an entrepreneur is to build something that somebody else would want. And what that means is, hey, you can run this business. There will be 65%. I have year over year showing all the expenses. And guess what? That means there's 35% left for you, the new business owner. And whether you need that to live off of or for your taxes or to invest or whatever else it is. And that's why that's what a healthy company is built as, so that the next person would want to say, oh, heck yeah, I would like to take that over because I can see that it's going to support me and my family. Okay, that brings us to any other questions and Q&A things. I'm going to stop sharing because there's no reason for us to have that up there. You can see my face now. All right, what other things come up that I can help clarify?
I'm just going to ask the question, if I may. As a service-based business, um, income varies literally week to week. Some weeks are more consistent, some months more consistent. Is there any, I don't know if advice is the right word, but just any thoughts around people who operate in that capacity? Because it does impact my life greatly, whether it's business expenses or personal.
When you start, and I remember you saying you're in 10 years in business now. So you've got 10 years of historical data, and there's a story that goes along with that. And in America, we all experienced COVID, and it affected your business in one way or another, most of us, whether it hurt or helped. And then some, it stayed the same. But then what happened right after that? The supply chain crisis. And then what happened after that? Then we had inflation. And then guess what happened last year? We had an election. So all of a sudden we have 4 years of like, I can't see which way's up. But most of you have a sense of what I think I can earn and what you're and a pulse on the marketplace, especially if you've been in for 10 years or so. So you're going to look at that and say, this is what I expect my revenue to be. And then you're going to say, this is what my expenses, how that should correlate with it. But especially if you're seasonal, so people in the school space are going to be like this, people in real estate or other seasonal based construction can be this way, depending upon where you live in the country, that you're going to know that there are boom times of your year and then, feast or famine times. So this is where, if that is the case, this is where you're going to want to siphon off the money when it comes in and only operate your business off of that portion, not 65% of that month, but of the whole year. Set it aside, and then that sustains you through the rest of the time. And that's a great question on that. Some of you may be where the downturn, and COVID was a great example. Like, none of us thought it would last more than 2 weeks, did we? And when it was on third week, it's like, okay, maybe it's another week. And then when it was a month, I know I was hoping for the year of school to be over so that my kids could just stay home. And so, but then after that, it's like, hey, we're done with this. Why is this still happening? And nobody thought it would be a year plus of it affecting our businesses. But what it taught us was, at a certain time, you've got to make the decision. When were you going to lay off people because you no longer can keep them off of COVID? And whatever is going on, if you can think about, hey, I'm gonna ride this out until this point, and then I've got to make these tough decisions because cash flow. Paul, you might see that same thing with marketing, that you're like, I've got this set aside. And a lot of people who want to do a progressive marketing thing, they set aside the money along the way and say, I'm going to just set this aside, because I want my cash flow to be there. And then when the time comes, it's like, I've got this here, we're going to put it all in and see how this works. It buys you that time. So this, our webinar today was really on where's my money, where do we find it? And now that you've identified where it is, then you can say, all right, how am I going to make these decisions on cash flow to get me through the ups and the downs of a seasonal business, the uncertainties of a business. And then you also have a real clear view of where's my money. Well, that debt for this client was horrific. You could see how much it just shackled them. And at the end of 2024, they were in worse debt than they were at the beginning of 2024. 2 credit cards with balances on them. That has to stop, because you can't go 3 years of that. You can, but you're going to lose a lot of sleep and probably have an ulcer or two.
We have a minute or two left. Is there anyone else who would like to ask a quick question or share a thought based on today? Okay. You change your mind. I just wanted to let you know that next month the topic is going to be crafting your chart of accounts. So all of those line items in the P&L and the balance sheet that Michelle was showing, Those are all made up from the chart of accounts, which you can customize in your books. And customizing your chart of accounts properly has a huge impact on the usefulness of your financial data and your reports and your ability to discover what you need, including where the heck your cash went. So that's our next topic for next month. You'll get the email, of course. And I just want to thank you all so much for being here. It was great to have you here, have your participation. And yeah, wishing you all the best and hoping you'll see us in a month when you come then.
Thank you, everyone.